Hi, everyone. This is Rob Roy of Elliott Options, and welcome to TradeFinder Live. This would be an interesting one for those of you that are new with us. If you are, I'll explain why in a minute. If you've been here before, probably looks a little bit different. I'll explain that as well. But before we go any further, as you know, we have to go through this wonderful disclosure disclaimer where we talk about the fact that we are not registered to give individual investment advice in the United States. And in addition to that, any pricing that we're talking about, because we have a lot of international subscribers, are assumed to be in US dollars unless denoted otherwise. So in all seriousness, take a snapshot of it if you haven't seen this already. While you are looking at that, a couple of housekeeping items. I mentioned that if you're new, this is a little bit different than what you'll normally see. If you've been here before, you know this setup is a little bit different. And the reason for that is that on holiday, home vacation for the Thanksgiving week, and I'm in a cabin. I'm actually in the basement of a cabin in the Appalachian Mountains. So beautiful area, a bit colder than Florida up here. Not the greatest internet. This is an area where dial-up is still not that distant from when they've moved into faster internet speeds. So I have support on with me. John's with me. Just in case there's any issues, he can jump in and help out. And in addition to that, when we ask questions, I do want you to type your questions in the Q&A. And because I don't have my normal SpaceX Dragon-looking setup with multiple screens and stuff, we're working on this one screen. Support's gonna ask the questions to me that you write in. So that we keep everything private. So just a little bit of an idea of how things will work. But other than that, the process will be the same. For those of you that are new, we'll go through and do a little bit of a market update, talk about where things are. Interesting day today in the markets, and we'll see that when we start looking for case study considerations as well. After that, we'll go through and look at our website, see if we've had any closed positions during the week for our subscribers, review those with you. We haven't this week, so we got something else to look at. And then we will review previous case study considerations. A couple of them have moved. And then we will look to see if we can find a case study consideration for tonight's class, which we will track. Again, for those of you that are new, we've been tracking these ever since the inception of the TradeFinder webinar, and our performance is pretty stellar. Anybody that's on this, I think, would agree with that, that's followed any of the positions. It's been pretty amazing with the considerations that we've identified during this class each and every Tuesday. And then at the end, we'll answer as many questions as we have time for. Understand that if I don't get to your question, it doesn't mean it was a bad question. It doesn't mean there's anything other than the fact that we ran out of time. With that said, let's go ahead and take a look at where we are in the market right now. So here's the chart of the S&P. And today's move that I mentioned was interesting. First of all, let's check volume, and as you would expect this time of year, the last video that we did on the S&P was, is there going to be a melt up between now and the end of the year, which is typical this time of the year. And what that means is it's low volume, low volatility. There's an old expression, never short a dull market. So the markets tend to just drift up this time of the year from the holidays. People go on vacation and managers wrap up their books. It's just not as much of normally a volatile time of the year. And because of that, it tends to drift to the upside. Will that happen? Well, if it does happen, well, before I take the volume off, because I want to show you the zigzag, the low volume is not a concern or a surprise at this time of the year, was my long-winded point, because it's going to be that way. It'd be unusual to see average or above average volume now that we're in Thanksgiving week between now and to the end of the year. And we also have that period of time between Christmas and New Year's, which is known as the Santa Claus rally, really, really low volume, and the market tends to drift higher. Now, with that said, because the volume is low, if something unusual, if something unexpected happens, those moves get exaggerated as well. So if there was some sort of a bad news thing that came out, we could have a move to the downside that's exaggerated because of the same factors involved there. And then volatility switches from being low to unusually high with the low volume, because it becomes like a vacuum. There's just not enough people to stop the move if it's really negative. Now, that's rare. It has happened in the past. Nothing's 100%. In general terms, we drift up from this point in the year. So here we are with today's move. Now, we made a new closing high today in the markets. We haven't taken out the high of the 9th of November yet, but we've closed higher, because if you remember, we opened high that day, but we didn't close there. We closed way down near the lows of the day, even though it was still an up day with a little bit of a gap. We filled the gap the next day, and we've spent a great deal of time here now at the 61.8% fib extension. And now is today the first move breaking out of this consolidation for the past 2 weeks, basically, and ready to move up towards that 381 level, which we've been talking about for quite some time. And then if we move past there, then's the next level, 420. And they've seen it really, if you're not have not been exposed to Elliott Wave and Fibonacci, there's been a lot of investment managers that are targeting both of these 2 points. If you watch the financial networks, whether or not you've been into Fibonacci or Elliott Wave in the past, you've heard these numbers, 381, 420. Like, I wonder where they're getting those numbers from. Well, there they are. They're the fib extensions from this zigzag. So maybe they're coming up with them a different way, but that's where they are right there. And I imagine that other people are looking at the Fibonacci levels. And my belief is, whether you feel like there's some mathematical order to the universe, as some people do, or not, enough people believe in the Fibonacci levels because they do act as support and resistance. We've proven that, I think, just in our time here. Elliott Wave options. So my point is that whether you believe there's anything else going on, enough people look at them, they act as support and resistance. You ought to know where they are, if nothing else. Whether or not you choose to use them in your trading or not is up to you. We do. We're big believers in them, and they've borne fruit, so to speak. So there's the 2 levels. Now the 420, we can talk about that after we get to 381. Let's get to 381 first, because things are going to be a little bit interesting come January. We still have potentially Republicans controlling the Senate, Democrat likely is the president, the Democrats controlling the House, and the market will be happy with that. The market will be okay with that because it doesn't like it when one party controls everything. We talked about that in one of the S&P videos on YouTube as well. Now, if one party controls everything and there's still those 2 runoff elections in Georgia, that could change the Senate. The Senate could end up 50-50 with the deciding vote being the vice president, and that's Democrats. So that means the Democrats basically control everything. I don't think the market would take that too well. So that's something that we just wait till January. Nobody's going to know until that runoff election occurs. So as long as things stay split, I don't think the political stuff is really that much of a. I know a lot of people have written in and you've made comments about, oh, the election's a mess, and it is a mess. But the fact that the concern, and I voiced this in some of the videos as well, was that blue wave, the blue sweep, and that's the Democrats controlling everything. And I'm not playing politics. I'm not picking on the Democrats, not saying that that's worse than Republicans or vice versa. Everybody's passionate about their own political beliefs. I'm saying how the market reacts to politics. That's when I'm talking about politics, that's the guys I'm talking about. It is how it affects the markets. And historically, the market's been okay when they're split, when one party doesn't control everything. When one party controls everything, whether it's been Republicans or Democrats, the market has historically not performed as well. That's just the way it is historically. So that's why we spend time talking about that. So that could change things in January. So that could be a mover. The virus is still a bit of an unknown. Now they're coming out and throwing a little bit of cold water on this whole vaccine thing by saying, well, we got to make sure everybody knows what the side effects are. And the side effects don't sound like it's too pleasant. Basically, from what they're saying, at least this is from the CDC. So take that for what it is, that the side effects are like having a mild case of it. So if you go get the vaccine, you're going to get sick, basically, is what they're saying. So is that going to scare people away? Is that going to affect anything? As far as the virus itself, are they going to shut down the economy? The things of, New York shutting down their schools and Michigan shutting down gyms and restaurants and stuff. That's the kind of thing that could be an issue. But then the other side of the coin is, could that be offset with the Federal Reserve stepping in a bigger way because things are shut down more? Because I believe the Federal Reserve was withdrawing some liquidity until recently, and that's changed, I think, now. But I think that was going on before. So anyway, that's where the market is. So there's not much else to talk about the market itself. We could look at where the DMI is, and you can see that the ADX has just kind of been ho-hum. It's been pretty much neutral for most of the month of November. But from the two directional indicators, you can see that, well, the buyers are in control. So the buyers are in control here, and they made a significant separation between the two directional indicators today. So that's why I said today was interesting for a number of reasons. One, we've put a little distance now between the 61% extension. We've got a new closing high. The next thing is to take out the high from the 9th of November. And if those things all occur, it's hard to envision a scenario where we don't go up and at least hit that 381 level. So I think that when we start looking at searches, we'll see what the outlook is on a number of potential bullish positions. So, all right, that's the market. Any questions in general on the market, we'll cover those at the end. There'll be a new S&P update coming out soon, talking a lot about what I just went through. And then we'll get into the dollar and interest rates and things like that, because they've moved as well. But I'll save all that stuff for the next market update. All right, now what I wanted to do is we didn't close anything in our website. And for those of you that may be brand new, this is our website, Elliott Wave Options, all this stuff across the top, the dashboard. And in our trade register, which that's what this is, it's a trade register, we show everything. We show entries, exits, what the alert was. We even have a mark-to-market time graph here that shows you what the position looks like each and every day, every single day. So the entire portfolio is updated, mark-to-market, every position, every alert, every single day. So we're as transparent as you can possibly be if you are looking for some type of a service along what we offer. But in addition to that, we have tremendous education. We really pride ourselves in our education. We've gotten a lot of great testimonials on YouTube about our education. So take advantage of it. And if you're a subscriber for the alert service, then all the education's 100% free. So we're pretty proud of that. So what I wanted to show you is two things. One, we did open up OZK, which we had talked about last week. So there was the position. We ended up with the February 30 call, and you can see that, hey, made a nice move today. There's the move to the upside, started up, went down a little bit. Not unusual to see option positions go negative when they're long option positions, and we don't do short trades. We don't do trades where you have more at risk than our finite amount, 500 unlimited risk. We don't do that. So $500 max in each alert position that we send out. So nice move to the upside there in Ozark. Let's take a look at the chart real quick, and you'll be able to see today's move.
Hi, Rob. Just to let you know, yes. As you're moving between applications, there's a bit of a delay. No, it's fine. It is probably just about 5 to 10 seconds. We've got your chart now.
Oh, the chart of Ozark?
Yep, we can see it now.
Okay. I'll go back and show them the website chart. I forgot about that. With this setup, I have to reset it up. In the other format, I don't have to do that. But with here's the the day on Ozark, you can see really nice day, 3.5% move to the upside. If we go back and look at the moving averages, you can see there's that lime green line, the all important 10-day moving average that you've heard me talk so much about. So we tapped that on the low. Big move to the upside today, almost to the point where we're back to being a little bit overbought again. But we'll see how the volume picks in tomorrow on this, but the DMI still looks really, really good. You can see here that the ADX is breaking up, hasn't gotten to 40 yet, so we have room to go. And this is really important when you're looking at the DMI. The ADX tends to lag a bit, but the two directional indicators are very responsive. They're quick when the market's moving. So you want to see if there's a chart moving the direction you want it to move, you want to see those directional indicators respond quickly. So it shows that it wasn't maybe a head fake or just low volume move that may not hold, that type of thing. You want to see that there's some power behind you, if you will, from the two directional indicators. In this case, showing buyers are in control. Now, the volume is probably going to be a little bit less than average, but in reality, the volume is actually pretty good. When you look at yesterday, it was almost non-existent, but today, considering this time of the year, almost average volume is pretty good. So that looks, it looks like this one's ready to go a little bit further. So if you follow this one, you should be pretty happy with where that position sits at this point in time. So what I want to do is go back here, and I'll share the screen with you.
That's fine, Rob. That worked well as it was. All it is it's just a delay when you switch between ProfitSource and.
Oh, okay. So it did show the screen. It just delayed. All right, I'm with you now. Sorry about
I think
that.
It's just the internet bandwidth.
Yeah, very well could be. Yeah, as I said, in the mountains. Even though I'm near the top of a mountain, still not so great up here. And then the other one that I wanted to show you was the next one on the list here. Is on FLR. So that was that's in the impulse strategy. FLR is in the volatility strategy, and you can see pretty good movement there today as well. Here's the mark-to-market graph, and pretty good for one of our triangles. Typically, they can labor in the loss area for a while, because remember, you're buying a call and you're buying a put, so time decay works against you day one, right off the bat, and you're waiting for the position to begin to move. And so once the position moves, well, then you have the opportunity to start to generate a profit. But if it takes a while and time decay is continuing to move, then you just slowly are drifting down until you wait for that breakout day. Now, the indicator, the low ADX that we utilize, helps to give us a little bit of a cue of when we're likely to break out. But sometimes larger triangles form, a la Tesla, which I'm sure everybody wants to look at, because I don't think I've ever done a webinar when somebody didn't ask about Tesla. So we'll look at that one as a perfect example of it. In fact, maybe we'll just do that after this. But there's the breakout. As you can see, we had this pretty well formed ascending triangle here, and then we had a breakout day yesterday and a confirmation day today. So if that's new to you, if you're new to the way we do our strangles, etc., it's not just for strangles, but any sort of a break of a major moving average, support resistance line, triangle pattern, etc. You always need that second day, confirmation day, the follow through day. One day can be a head fake. It happens all the time where you get a big move one day, everybody jumps at that move, and then there's a reversal. Obviously not all the time, but it happens enough that we have this rule that you need a second day or a confirmation day. So today was the confirmation day. And if we look at the moving averages here, again, a little bit overbought with that big move today. A little bit of a gap here, which we wouldn't have had that gap. As far as the continued move to the upside, let's take a look and see. Good separation there between the directional indicators, and look at that ADX starting to move up. So this one's starting to look like not only is it a triangle breakout, but we may have an uptrend building. Little too soon yet. The ADX hasn't even broken 20 yet. Looks like it's going to, but I've cautioned many times, that when you see, and this is a perfect example, when you see a chart of the DMI like this, don't jump the gun and say, okay, going in long full bore here because we're about to generate an uptrend. That ADX can turn and head back down. It hasn't broken through 20 yet. And it's been my experience, talk about this a lot too, our trade scan series that we have in our educational area on our website. We went through every one of our confirming indicators, and we talk about this in the DMI as well, as when you see the ADX breaking up, most people talk about 25 as the level. I utilize 21 because I changed the periods to 13 versus the normal 14, because 13 and 21 are Fibonacci numbers. And it's also a little bit more responsive. So changed it to 20 instead of 25. So moving up here, you still want to see that break above 25, even though at this point it looks like there's no doubt it will. There's always doubt about whether it will or not, but so far that looks great. So that's what I wanted to share with you for this week, since we didn't actually close anything, is the fact that we identified OZK here in TradeFinder. We liked it enough to send out to our subscribers as well as an alert, and that's working well. And then FLR is one that our search has found for our proprietary strangle portfolio. So let's go ahead and, since I've brought it up, let's go ahead and look at Tesla real quick, and then we'll go and look at some of the ones that we've looked at in the past. But Tesla is, before I forget my train of thought here, it was a great example of what I talked about with a potentially larger triangle forming. Here was the original triangle right here. And I said, that's about as good as it gets for forming a triangle. And I still stand by that. That's about as good of a triangle as you'll see. Symmetrical triangle, really well formed. Well, then it looked like we broke to the upside. Now, that was a head fake. And then we came to the downside. Well, you don't get two head fakes. That doesn't happen. You can get a head fake one direction and the big breakout move being the opposite direction, but you don't get head fakes in both directions. When that occurs, it's telling you, hey, we're not done yet. We're forming a larger triangle. And that's what Tesla did. It formed a larger triangle. So same beginning point, and you just had more times where the stock touched the trend lines, just formed a larger triangle. It's frustrating because you're waiting for it to break out. So that part becomes frustrating. This is where time goes by, tick, tick, tick. In this one, we actually, at Elliott Wave Options, we've talked about this. We haven't done a great deal of education on it yet, but we're about to. We're compiling stuff. We did a twin butterfly. I talk about those, but we don't have the education piece completed yet. But when you have stocks like this, it really bears a consideration, because it's way too expensive to do a traditional strangle on. When you're dealing with a $440 stock, it's just too expensive. So the twin butterflies is an inexpensive way to try to capture both the upside and the downside, understanding that one of those two butterflies is going to expire worthless, whichever direction the stock breaks. So we'll have that data for you in the future, as well as a really cool presentation on twin butterflies down the road. People have asked an awful lot about that. The number one question that we get, I think everybody would agree with that, I think support would, is the out of the money butterfly that we do for directional trades. Just normal directional trades, we like to do out of the money butterflies when the situation warrants it. A lot of people ask questions about that. So then we started talking about twin butterflies, and what are you talking about? So I think it'll be some good education. But here you can see what happened. Note, touch the line again, touch the line again. Two more times, both on the upside and the downside, or the upper trend line and the lower trend line, where we touched the lines before we broke out, just built a larger pattern. And I did say that the offset of the frustration of having to wait when a larger triangle forms is that usually the wait is worth it, in the fact that the breakout becomes even more volatile and larger than it would have been with the smaller original triangle. And look what Tesla's done. And everybody keeps saying, all right, it's always the news media has to come up with a reason for everything. Maybe things just happen sometimes. Maybe it doesn't be a specific reason that every single thing happens. Well, they've been using that Tesla continues to go up as it's now being included in the S&P 500. I think that news is out there. I don't think that's why it's still going. Obviously, investment funds, et cetera, that mirror the S&P are going to have to buy the stock. And then as it starts to go higher, I think it goes in January. And as the stock goes higher, they're like, oh, well, we better get in and buy. So there's a little bit of that, not wanting to let the stock get too far away before they have to buy it to include it in their fund. This is water, by the way, not moonshine. Any of you that watch Moonshiners, just on the other side of the mountain of where I am now is where they filmed that show. If any of you have ever seen it.
Rob, if I could jump in there just quickly, Kurt was just letting us know that he has actually put a 525, 50, 565 fly on based on your analysis, and he closed it out and he made 157 per contract. So I thought that was good to note. And Pankaj was just asking if you wouldn't mind to put the Elliott wave count on Tesla so that you can have a look at the Elliott wave count.
Absolutely. Great suggestion, Pankaj. And there it is. And you can see we're getting towards the lower end of the tap box, which stands for time and price projection, if you may be new. So everybody else is used to the terminologies, but you can see we're getting there. And let's take a look at the 10-day moving average as well, because we're getting overbought. Congratulations on your trade. That's awesome. You can see here that we're a bit above that 10-day moving average now. So a little bit of rest for Tesla is probably warranted. And at this point in time, doesn't have to pull back. Remember, we don't necessarily have to pull back. Just a little bit of rest. And you can see that it took a day or two to break those old highs. Not long, but a couple days, and then it busted up to the new highs. And so from that point in time, we may see, or at this point in time, we may see a test back down to that level, which would allow the 10-day moving average to catch up. That makes sense. And I've said this a lot always, or often, what makes sense in the market isn't normally how things go, but that would make sense in this case if the stock pulled back down, tested that previous wave 3 high, caught up with the 10-day moving average, and then it could be ready to go higher from there if it wants to. But this stock just confounds everybody. Nobody really understands the valuation because there really is no historical common era comparison for the way they look at this stock. But that's a great example of a number of things. So I'm glad we did that now. The fact that we built a larger butterfly, had a greater breakout, the twin butterflies. You heard one of your own viewers there share their experience. So all that's awesome. Pardon me. Thanks for that. All right, so let's go ahead and take a look at, here's another one. We'll kind of do like a fan favorite night tonight since it's a holiday week. On NIO, we've been looking at this one for quite a while. We've had two separate winning alerts for our subscribers on NIO, and it's another one just continues to want to go up. It opened higher today and then pulled back down, but it was getting a bit away from its, let's go to yesterday's close here, and you'll be able to see how we were getting away from the 10-day moving average a bit there. So with the open today way up here, that was just too far away. Came back down a little bit more towards the 10-day moving average. Not a whole lot of gap there. But here's what's crazy with this stock is the way it continues to run, and this momentum run is, look at that ADX. With this setting of 13 on the periods of the DMI, this is about as high as I've ever seen an ADX go. We talk about that in the DMI, the range is 0 to 100. But even in the rules on the DMI, it talks about readings above 60 are rare. So why did Wells Wilder make the range from 0 to 100 if it's rare that it ever goes above 60? I don't know. We'd have to ask him. But the fact that we're up here above 60, heading towards 70, with the periods changed to 13 here, is again about as high as I've ever seen that. So yes, this has been a really strong move, but talk about being a bit overbought short term. The strongest part of the move is likely over. Now, that doesn't mean it can't continue higher. Remember that when the ADX shows you the strongest part of the move is over, it doesn't mean it can't continue to go higher. It just means that as it goes higher, there's less oomph or strength behind it, which makes it what? More susceptible to a pullback, right? So that's something to keep in mind if you wanted to continue to trade it. So let's add the Elliott wave on here. And as you would likely expect, that is in a wave 3. So here makes sense again, is that we get some sort of correction here. Let's that ADX come back down to earth a bit, and then the stock can turn and head back to the upside again from here. We'll see how that plays out, but that would be a scenario that certainly would make sense with where the indicators sit at this point in time. Now, maybe it goes back up another $10 or $20 before any sort of a meaningful pullback. But wow, that I wanted to share that ADX with you because that's an unusual sight to see it up that high. It got up in that area before, but not quite this high back after this initial run when it first moved into breaking above the $10 barrier. That's an important level. For those of you that may not know, is unless you're registered as being a very aggressive growth as your investment objective in a mutual fund or some sort of investment manager type account, you can't own stocks under $5 a share. Once it breaks $10 a share, then that allows growth, even some growth in income. It opens to a lot greater audience, pardon me, for potential ownership of a stock, and the volume tends to jump up when that happens. So it's not unusual at all to see once a stock breaks 10 for it to take off and run for a bit, as some of those funds now can stay within their, pardon me again, stay within their investment objective and still buy the stock. So, pardon me 1 second. I'm going to turn the heater off. I'm not used to heat. It's drying my throat out. 1 second. Pardon me. Okay. Sorry about that. But, yeah, you know, I talk a lot, so when you run in your mouth and you got heat blowing in your face, then it dries your throat out. I know it's annoying to hear coughing in a webinar, so I do apologize. All right, so let's look at GNTX. Was one that we looked at last week, and kind of really hasn't done a whole lot from last week, just going sideways here. Held the 10-day moving average, doji yesterday, moved back up today. Maybe that's the start of something from here. You can see the DMI here is also showing an ADX above 40. That makes you a little bit nervous as far as entering a position. Entering a position when the ADX is over 40 is if you do that, it doesn't mean you can't do it. Because again, remember when it's telling you that the strongest part of the move is over, I just want to reiterate this. It doesn't mean the entire move is over. So, you know, don't want people to get mad at me and say, oh, the stock still went up from there. It can. Just saying that it's a weaker move. And when it reverses, so what would be the opposite thing to do, or the corresponding thing to do? It tightens stops, right? So if you're going to trade that and you're trading stock and the stock's moving to the upside and you're got an ADX that's above 40, that's a cue to tighten your stops up a bit so that you protect the profits if it reverses and starts to come back down, which is probably going to do at some point in time. So I don't think we did anything with that one. We just took a look at it, so I thought we would update that one. The XLF talked about this a couple times here and also on the S&P update because of what was going on with interest rates and how it felt like the financial sector was an interesting place to look. And we did OZK. That was the one that came out of it, which you saw what that did today. So that was a indication of how much we believe in the financial sector moving to the upside with what interest rates are doing. Energy is also doing well, which we'll take a look at. Here's the chart of the XLF in a wave 3, and then looking at the DMI. Boy, that if you're in OZK, that makes you feel good, doesn't it? Or if you're in some other financials, TCBY was one that we did for a while. Something interesting about that, again, I can't give you individual investment advice, so I'm not going to tell you a trade or anything along those lines. I'm just going to say that one interesting thing about TCBI is it has exposure to both financials and energy. We had a alert on it before that did very well for our subscribers. Still looking at it, just something to throw out there, something for you to look at as a consideration with both of these sectors doing well. So taking a look here, not too far away from the 10-day moving average, because basically we were consolidating it over the last week or so. Basically after we started talking about the financial sector breaking out, and then it went into consolidation and took off again today. But boy, that DMI makes you think that we've got a lot more room to go in the financial sector. That's pretty exciting again for OZK and any of the other financials that you may be in. So since I mentioned the energy sector, let's go ahead and take a look at that. I do want to get to looking at the charts here and then getting to your questions, especially on a holiday edition here. See what I'm talking about? The XLE, and that has the guys at ProfitSource were telling me that they have a really cool sector rotation thing that's going to be released. That's showing that this is one of the best sectors to be in right now. It's a really good tool for rotation. So if you've watched this ProfitSource and you haven't purchased it, now might be a time to consider doing it because there's so many cool things that are coming out. I'm about to show you another one here in just a second. So when you see that it's showing that that sector is strong against the rest of the market, which is how that indicator works, that matters a lot too. So there, look at that DMI. So two places that you may want to consider. Now, another one that's doing well is utilities, which, yeah, that's not as exciting because utilities is defensive. So that may be some of those funds that are taking whatever profits that they have for the year. Because a lot of, and just trust me on this, a lot of investment managers, they're done after Thanksgiving. They just take December off if they've had a good year. If they haven't had a good year, then they're scrambling because they have to hit numbers to make their bonus. And that's how investment managers make a lot of money. They get paid well, don't get me wrong, but the bonuses are where it's at. That's where their big money comes from. And so they have to hit benchmarks. It's not, you know, they don't tell you what they're going to make. They have to make or meet or exceed the benchmark. So if it's a S&P 500 fund, then they need to at least do what the S&P did for their bonus to be what they hope it to be. So again, if they haven't had a good year, they're scrambling until the end of the year to try to make their year. If they've had a good year, then they're ready to close up shop and go away. Another reason why volumes drop. So all those things are what goes on behind the scenes. But so what I was saying is that some of those guys may be parking their money in utilities. It's safe. It's normally a defensive sector. Safer, nothing safe. I shouldn't have said that word. Safer is viewed to be, let's just stay with defensive. Okay, let's forget the word safe. Safer, it's defensive. Is a good place to posture if you think, as I do, that January may be a very volatile month. So that could be what's going on there, why that sector is doing well. It may not be a precursor of something to happen over the next couple of weeks. It could just be as innocent as guys taking money out of high beta stuff parking it in utilities because, you know, they don't want to risk losing a decent year that they may have had already. Anyway, I'm just babbling now. So, but these two sectors are really good, financials and energy. And then I looked at NIO already. So that was what I had to look at. So let's go through and take a look at the cool stuff that I wanted to show you that's been added into ProfitSource. This is for our subscribers at Elliott Wave Options. Look, we've added a whole bunch more searches over here on the left-hand side. You're used to seeing the EWO, bullish, corrective, bullish impulse, corrective, and the consolidating stocks, which are basically my search parameters that we have programmed in so that our subscribers can utilize them. And it's an educational tool. Follow along. Like quite often, our subscribers will ask, well, why didn't you pick that one? It's a learning experience of what was the reason it showed up on the search, but it wasn't sent out as an alert. Why? Why was this one picked out? That's how you learn. And we like people to ask questions. We have a wonderful support staff, 24/7. Those guys are answering questions. I get back to you within 24 to 48 hours, quite as responsive as those guys are, which I hear about all the time. But if you want to ask a question specifically to me, you can do that. But we have a wonderful support staff as well to answer any sort of questions that you may have other than individual investment advice. But now you can expand your search capabilities. Like look right now, the bullish impulse stocks, 30 of them. That is a lot. That's about as many as you'll ever see in that search because the search is kind of stringent. It's multiple indicators. We have to get a yes answer in all of those indicators. So quite often, and I've talked about this before too, when you're trading, you don't look to find a reason to trade. You look to find a reason not to trade. And if you can't find a reason not to trade a particular stock, that's one you want to trade. You can find some indicator somewhere on most stocks that'll give you a, okay, that's a go ahead. But that's not how a good technical trading system works. So you want to look to see if there's a reason not to trade. Well, having 30 of them here, that's a lot when you have so many indicators as we do. But now we have bullish wave 3. So that says how many are in a upward moving wave 3. How many stocks are in an upward moving wave 3? And look at that, 664. So if you're long the market, you know, that's pretty good backing that the market is making a decent move right now. There's something behind this. How long will it last? That remains to be seen. That's the tricky part of a wave 3, isn't it? Is when does the wave 3 end? Because when the wave 3 ends, the corrective force starts. So that's the hard part of trading wave 3. A lot of people stay away from it. I don't like that at all. I think the wave 3 is the best wave to trade because it's the strongest wave. Little easier to figure out when the wave 3 is going to end if you can find a zigzag pattern in there. So let's take a look. So now what you can do is you can put an X there in the impulse stock. So that gives you all the ones that meet my criteria for an upward move. And then we can mirror that if you're like, okay, I like wave 3s. Well, how many of those are in a wave 3? Look at that. Wow. I didn't expect to see that many. For those of you that are new, I don't pre-look at these. I don't think that's a good educational thing if I'm, you know, stacking the deck, if you will, or pre-setting things up or pre-plan. I like for you to just hear my reasoning as I talk it through with you. I'm talking out loud what I would be doing at home or in my office on a daily basis, which is in my home, but still it's an office. But so going through and looking at these with you, sharing with you the same thoughts that I would. This is just always on here. We already looked at this once and there wasn't anything we could do with it. It just keeps going up. So if you had a huge account to buy the stock, then you would have done okay. But from an option standpoint, there's just no, and the spreads are 6 miles wide, but there's just very little open interest on it. But it keeps on powering higher. I just thought I would show that to you because it's shown up so many times before. It's just in one heck of a run. So Aflac, there's a financial, another financial, several financials. And that's when, you know, it's what I just told you is the financial sector is doing well. The energy sector is doing well. You expect to see those kind of stocks. I don't get this one at all. Royal Caribbean? We got to take a look at that just for the heck of it. And that's surprising considering the concerns over more potential shutdowns. But hey, it's oftentimes the market moves away from what your common sense thinking might be on a particular strategy. So there we have nice wave 3 moving to the upside. Really surprising. And a decent looking DMI. So maybe that caught a bid because of the vaccine, and they think that's going to resurrect the cruise line. But we backed off a little bit, so you can see on the day of the 9th there when the news of the Pfizer vaccine came out, and then we pulled back a little bit, tested that break, and then went sideways a little bit and had a little bit of a down day when people started closing stuff. But it's back off to the upside. So use whatever fundamental backing you want. The technicals are saying it's going higher, which is just surprising to me. All right, let's Disney is on there. So I guess they're feeling they're going to open the theme parks again. Snap-on. Let's see what Snap-on looks like. Yeah, that looks good. CCI's got room to go, and the DMI looks like it's just getting ready, and a little bit of a doji today, so maybe we want to see what happens on that tomorrow. And then, of course, the market is closed Thursday and half day on Friday. But so breaking to the upside here, we'll see what that doji does. But the ADX is starting to like this move here from consolidation. We went through consolidation there for a while, right in here, and then broke to the upside. Let's see what the options look like. Sony is way up after hours. We'll see if that holds into the open tomorrow. We're going to have some really cool brokerage stuff to show you in the not too distant future as well. Right integrated with ProfitSource. It's going to be super cool. So many cool things come out. There's not a lot of, there's no liquidity unless you get the 20 delta. That's disappointing. So, all right. I thought that one looked like that could be something, but you don't want to trade against the market makers. It makes it a lot harder with a 50-cent wide spread on a $2 option. TJ Maxx. Obviously, from a fundamental standpoint, the right time of the year for the retail sector. The chart looks almost identical to Snap-on, doesn't it? When we have a consolidation here, ready to break back to the upside. Really good looking DMI. I know this one has liquidity, so we don't have to worry about that. Well, that could make a lot of sense just right there, right? The reason that I'm speeding this up and not looking at as many of them is I want to spend the last few minutes of this at looking, letting you ask questions, and let's take a look at some of your favorite stocks as we get ready for the holidays. So this is what we're going to look at. We're going to do TJX as is our case study consideration for this week, and there may have been other ones there, but again, I'd rather utilize the time on this webinar to answer your questions. Or look at your stocks before we wrap things up. We've got a few more minutes. Anything anybody wanted to look at?
Hi, Rob. Yeah, we've got about 7 or 8 symbols that people are asking about. The first one is from Sonic Bling, who's asking for BCRX.
Thank you. Pharmaceutical. Wow. Hasn't had a discernible 5-wave pattern since last year, over a year. Isn't that interesting? Everything corrective pattern since then. But it looks like something may be building here. It's been in a long consolidation. And remember what I talked about as far as the $5 level. If it breaks above that, it could take off. It couldn't hold it here. It tried back here and it fell back. But if it can break above 5 and hold it, then and it garners the interest of some institutions, has to be the super aggressive one to push up to 10. That could get interesting. Then, to me, stuff that trades below 5 is just can be. I don't want to use the word manipulated because that sounds bad, but it can be pockets of volume can move the stock in movements that don't make a lot of sense. So I prefer when there's more liquidity behind something, and therefore I pretty much stay away from anything below $5 a share. It's awfully close, and it looks like something's trying to build there. If it can break above 5 and hold it, get that follow through, then that might be something to take a look at. That's my opinion only.
Thanks, Rob. Pankaj was just asking if you could have a look at Boeing. He's saying it's starting to melt up.
He's right. He's right. It is. Well, they finally took off the hold or whatever you want to call it on the Max. So what's the 787 Max is able to be shipped again now. They got tons of them sitting around waiting to go, and they've had a lot of orders canceled. But it was really good news for them, and it sent the stock moving to the upside. Not currently in a 5-wave Elliott wave pattern, but looks like there could be a little more to that melt up here. But the ADX is right there, 40, still separation, and a little bit of a doji there. It's had a pretty nice move after going sideways for 6 months or so, doing absolutely nothing. It's finally starting to move. If it could break above this area right here, which were the highs back in June, if it could break above that, then it could head back into the area before the whole COVID thing happened back towards the end of February. So there's still room for that to go. Maybe it consolidates a little bit here after. We'll see what that doji means. It also could mean a big run to the upside tomorrow. But yeah, Boeing, if you had a little bit of patience, that looks pretty good. One of the other aspects of this is when you've had, because we got a lot of stocks, right? The market's at new highs now. So a lot of stocks are at new highs along with the market. So some of the rotation, what the investment managers will do is they'll look for stocks that they feel are good solid companies, but for whatever reason they've lagged this move back up off of the March lows. So some like Boeing, well, there was a legit reason, right? They couldn't sell their brand new plane, but now that's been taken off. Maybe the stock begins to play a little catch up. Maybe people try to get in a little bit in front of that, giving it time horizon down the road as far as when they're actually going to realize some of those profits, but potential's there.
Thanks, Rob. And Craig was just asking if you could have a quick look at OZK again and project an estimated exit for that.
Looks like I usually go right in the middle of the tap box where the Elliott Wave 5 target is. So be looking around 32. It's trading at 29.5 now. So unless something changes, the ADX looks like there's still room to go there. You saw what the XLF is doing. So there's support there from the sector. I don't see any reason why we don't run up and hit that Wave 5 target.
Thanks, Rob. And Santino was asking if you could take a look at PLTR. I think we looked at that one last week too.
PLTR?
That's right.
Yeah, we have looked at this before. Woo! Goodness. It was skyrocketing last time we looked at it. I think it was back over here. Was that about a week ago? Yep, it was last week. We looked at it last week, and it did consolidate for a few days. It was overbought last week, and it consolidated for 3 days. Remember, the consolidation can be one of two ways. It can go sideways. That's why people ask, the Ozark, there was a question that was asked about that. And here's a perfect reason as why. Because Ozark was, it could have been viewed as a little bit overbought when we got into it, and it did pull back for a day or two, but it doesn't always pull back when it's overbought. Sometimes it consolidates and then it takes off again. So you know, you don't want to miss one of these jumps to the upside by trying to time the move back to the 10-day moving average too perfectly. Sometimes you can get in at a better price if it does pull back. And if it goes sideways, maybe a slightly better price if some of the IV drops. Maybe not if there's still a lot of pressure momentum behind it. Sometimes that IV doesn't come out if it's a stock like this that's ready to run again. So now it's overbought again. So same scenario as where we were last week is it's likely going to need to go sideways a bit here. It could come back down, or maybe it just does the same thing it did last week, goes sideways, let that 10-day moving average catch up. But that's pretty good separation now from the 10-day moving average for a $25 stock. Let's look at the DMI. Yeah, see, there's not a lot of history here, so it's tough to put too much weight in any technical indicator when you only got 2 months of history, not even 2 months of history in a stock. But already it's showing that that's a lot of strength there. Maybe it calms down a little bit. Maybe it doesn't. Maybe it continues to run. But I would expect to see at least something like what happened last week. And note that it did that once before. See, it took off, went sideways, took off, went sideways. We used to call this the stair-step effect. When stocks that were really in momentum runs would do that. They run up, they consolidate, run up and consolidate. So it basically looks like steps to the upside. So I think we need one of those flat surfaces now, but so far that thing's continued to go.
Thanks, Rob. I know we're getting close to time. We've got actually a number of additional symbols. So are you happy for me to continue to give you a few more?
Sure.
Okay, great. Kurt is asking if you wouldn't mind to have a look at SONOS, SONO.
Well, big gap up and then consolidation from there. I really don't like those gaps. And, you know, I feel that they get filled at some point in time, but it could be a long time in the future. That's what the issue is with them, is that you never know exactly when they're going to get filled. But you can see that a little bit of a triangle there in the consolidation. So it looks like it's getting ready to go again. But is that going to be the upside or the downside when it breaks out of that little triangle? We just finished a course on triangles on our website. And one of the things that's talked about is Elliott always said triangles quite often are small. The big ones, like what happened with Tesla, that's rare when that occurs. They do occur, but normally triangles are not large like that. You can find a lot of little ones around, and it still creates a breakout. It doesn't matter whether it's large or small. Just the breakout is according to the size of the triangle, but it doesn't mean that it's any less apt to break out if it's smaller or larger. But it needs, the 10-day moving average needs to catch up a little bit. So maybe we get a little bit of a move back, or maybe it explodes out of here. The DMI still looks good. Buyers have paused a bit through the consolidation, but they certainly were involved. It was a pretty strong move to the upside there on the 19th. $5. That's a huge move. But Yeah, it looks like it's not done. It's just what happens over the next couple of days.
Thanks, Rob. And Mike is asking if you could take a look at oil, specifically the USO.
Well, we're going to find out a lot about energy here soon, aren't we? The short-term indicators, the two-directional indicators, are showing that strength is come in. That's not a good thing, is it? I mean, we're going to be looking at potentially higher prices at the pump, but the ADX is still low, hasn't broken above 20 yet. But if that breaks above 20, gets between those two directional indicators, and the stock breaks above this long consolidation area that we've had here, right around this 31, 32 range, we could be off to the races, which that'd be a little bit scary again for prices at the pump. But there's a lot of room for it to go back to the upside, obviously, from what happened with February and March with the COVID stuff. And remember the crazy, was it the February or March contract where it actually went negative $35? Long way from that now, but little bit probably overbought here. Let's look at the 10-day moving average with that move up today. I don't think it's going to be able to break through that without consolidating this a little bit. Doesn't seem like it would have the strength, but maybe it will. I mean, this could be the time of the year with the low volume that things could get exaggerated. But this area is really important. If it breaks above 31, it could be running. It could run for a while.
Thanks, Rob. John is just asking if you could take a look at LULU.
LULU. It will be interesting to look at. That stock has really benefited from the whole stay at home. Everybody buying athleisure wear, even men. So you could pick a couple different ways to draw the triangle here, couldn't you? Let's see what Elliott does. They're favoring the more descending triangle view. So connecting that high all the way up there. But either way, it's a triangle within a triangle, or a larger or a smaller one. Just take your pick. But we could also draw it here. Really symmetrical there. Really nice looking LA wave triangle. So the problem here is 340. So it's probably going to be pretty expensive in that twin butterfly range again. Then we talked about an inexpensive way to capture a breakout move either direction, again, knowing that one's going to go to complete zero. But the butterfly is low cost, high reward strategy. If it moves into your wings, like you heard the other viewer, then you could do awfully well. But it looks like it's ready to move. It looks like it's ready to break out, and it's already done. This is really classic. I'm glad you asked about this one. This is super classic Elliott wave. Look at this. So here was the 4 to the 5, correction back to the previous 4. So that's exactly what's supposed to happen. And then what did it do? Went into a corrective phase. I mean, you couldn't textbook Elliott wave any better than this chart right here. This is really what the Elliott wave 5-wave pattern is all about right there. That would be a great one to finish on, but I'll take one or two more if you want.
Look, there's probably a never-ending list, Rob. So if you want to finish there, I think that's fine, and we've got through quite a number of them.
Yeah, as we've got an extra 10 minutes, a little holiday bonus, but we do appreciate and happy Thanksgiving out there to everyone. Hopefully, you're having an opportunity to spend some time with family, friends. I know travel is a little dicey this year, but enjoy your Thanksgiving. I always like to try to give thanks around Thanksgiving and utilize it for what it's meant for. And we do thank you for viewing, spending your time with us, our subscribers. We're thankful for all of you. And so enjoy the rest of your holiday week, and we'll talk to you again next week. Take care, everybody.